Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here I am recording this on Friday, June 28th, after the market has closed. And AMC, it looks like they closed at $4.98, being up almost 4.20% on the day. So pretty exciting there. Would have been nice if it closed a few pennies higher, just above $5 a share. But if we do look over at the max pain for the day, for the week, max pain was $4.50. So we did close above it, which suggests that it is in the favor of the bulls. Although, it could have closed a little bit higher, like I said, above $5, maybe $5.50. That would have been a lot better. But I don't think it's that bad. I think it's pretty good that we closed green. And if we do look over at the weekly chart, we can see that the stock price went up nearly 10% over the course of the week. Here it looks like 9.45% for the week that we just had. So I do think that is pretty good, as we can see these 5 green candles here. Every single day for the week was green. So that is good. And so, I just wanted to go over some levels that are marked here on the chart. This is based on the linear axis for the y-axis here. I will also flip over to trading views so we can look at it on the log scale, because I think that also does suggest that we may be supporting a pretty significant level. And so that is going to be based on this Fibonacci retracement here. We can see the 786 is at a price of $4.41. Again, this is on the linear scale here in Webull, and we did dip below it on Tuesday, the 25th. We hit a low during the week of $4.33, but we closed above the 786. So I think it's really good that we respected that level. Although it might seem fairly discouraging that we have broken below this uptrend, which was based on the low from May 10th as well as May 31st. So it sucks that we broke below that. I do think going up to that level may be acting as resistance in the future, and that would be getting to these two levels here from the Fibonacci that mark the golden pocket, ranging from about $5.71 up to about $6. And that does coincide with that uptrend. So I suspect that will be acting as resistance, as we did hit highs over here on June 6th and 7th, getting up to $5.96 and $5.94. So $6 was a tough level to get to, just being psychological round number. And so I think that will be resistance again, but maybe the next time we test it, we have a little bit more momentum and we can get up to filling this gap here based on the close of May 14th. That was at a price of $6.85. So we do have a gap up to that level. Maybe we get up to it in the next week or two. I do think that is possible. But I did want to go over some other levels to the downside that I do think are important. One is this yellow line here marked at $4.10. That was the low hit on May 31st, and we have not broken lower than that. The lowest that we got over the course of the week, as I had mentioned, was $4.33. So we are still putting in higher lows, even though we broke below that uptrend. And since we broke below that uptrend, and since we are still making higher lows, I did want to show that on the chart here, which is why I added this uptrend based on the all-time low hit on April 16th, which is at a price of $2.38. The other pivot point for that trend line is the low from May 10th, which was $2.90. And so we are still above that level, which may be tested in the future. Maybe we get to that level, in the next week or two, but that could correspond with testing $4.10, maybe getting a double bottom bounce there, testing this uptrend, and that being a great dip buying opportunity. Or maybe we get a wick down to $4 a share, but then close above $4.10. I think that would be really good. I do think that could be suggesting that a bottom is in there, starting to fake people out, sweeping the low over here. Anybody who has a stop loss there, their position would then be closed. They'd be wiped out if the price did dip to $4 or maybe $4.01, not filling any orders at $4 a share. So that is quite a possibility. Or maybe it dips to 4.01 and 4.01's not filled, even though it dips to that level. So you got to be thinking about that. So maybe 4.02 is a good level to dip by. But, I do think that looking at the chart, well, it may be a little bit unfortunate. I just think it's good to brace for the possibility of that downside. So $4.41 perhaps being tested again, or $4.10. And, I think the expectation of $4 not being filled, I think it's good to have that kind of mindset, but also maybe to have some capital on the side in case $4 is tested. It'd be great to pick up some more shares there. So, I think it's good to prepare for all of that, to the downside, as that is a possibility. And speaking of to the downside, I did want to take a step back really quick just to show this purple downtrend I've gone over in previous videos. It is based on the high from August 31st as well as the high from November 6th. That downtrend, we have not broken above it or traded above it until we got this latest squeeze above it. But lately we have been consolidating above it. And since we have been consolidating for this long above that level or in this range, I don't really think this is a bear flag. One could argue that this down move with consolidation, that it is a bear flag. But since it's been going on, this consolidation, for more than a month now, I think that this is likely to maybe test $4, $4.10, or maybe $4.41 again, but those acting as dip buying opportunities, dip buying levels before we start to reclaim $6 a share and higher. I definitely think it's on the table, and I definitely think it's good to be keeping in mind that there is a gap fill at $6.85. Maybe there'd be some resistance there, but since that was the close from May 14th, that being the only day when we were trading above that level, I don't think there's going to be too much resistance there because there wasn't a lot of accumulation there. There was not enough trading at that level for me to think that. And so once we can get above $6 a share, I do think that we will be breaking above this uptrend, and we might be retesting the 50% level at $7.13 or maybe the 382, getting up to that $8+ range, maybe getting up to $10 or $11.43, which did act as resistance on this squeeze day on May 14th, and that does correspond with the high from November 6th. But, anyways, before I go on about this chart on the linear y-axis, I am going to flip over to TradingView so we can look at the chart over here. And so the reason why I wanted to look at it over here is because not only is the y-axis set to the logarithmic scale, but the Fibonacci retracement is also set to the logarithmic scale. And so whereas if I look over on the linear chart, we are trading above the 786 over here. If I look over on the log scale, the 786 is down here at a price of right around $3.35. Does look like that was resistance over here before we broke higher. Now we are trading above the 618, which is at a price of $4.40. Very similar to the 786 from here at $4.41. So I find that really, really interesting. And also I do have it colored yellow here, the golden pocket ranging from the 65% level to the 618. The 65% level is at 417, and that acted as support here on May 31st when we bounced, dipping to a low of $4.10 on that day, moving higher. And then when we pulled back, we didn't bounce from the 65% level. We didn't pull all the way back there. We bounced from the 618. So I think that suggests a lot of strength and that we are looking pretty good. And also this uptrend that I had drawn here from the all-time low to the pivot low here of $2.90 before the squeeze, this actually looks like we're getting pretty close to that level. So if we retest it on this scale, it's quite possible we will not be getting back to the 65% retracement. It's quite possible that the 618 may not be revisited again, or if it is, that's right around 440 or 441. So if we do pull back to that, look for a wick down, a close above, suggesting that a bottom is in, and following that, we could really be taking off. So, with that being said, I'm just really excited about the stock. I'm really excited about the chart, and I'm hoping that price actually resides down here around $5 or lower for the next couple of weeks, because I personally would like to be picking up more, but time is on our side. If it stays down there, if it starts to squeeze, it's going to be tougher to accumulate more shares. So I am in favor of it spending a couple more weeks down here before we get some more violent moves to the upside. And I definitely think it's going to happen. It's just a matter of when. And if that takes longer, that's better for me, so I'm all about it. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and have a great weekend. Take care.